All right, let's talk about the crypto crash. It's got everyone spooked, right? But what if? What if it's not the beginning of the end? Today we're going to dive into a really interesting theory that says this kind of sharp drop could actually be setting the stage for a massive V-shaped comeback. And we're going to look at a real-world example of how this theory is being applied to an asset called Bitmine.
So this is the big question, isn't it? The one keeping every crypto investor up at night. Is this crash a permanent problem, a fundamental break? Or is it just a really nasty speed bump on the way back up?
Right now, the mood out there is, well, it's pretty bleak. Prices are tumbling. We're seeing all these liquidated positions, where traders get forced to sell at a loss just to cover their debts. It's like a domino effect that's just sucked all the money and, maybe more importantly, all the confidence right out of the market.
But what if this isn't what it looks like? There's this one market strategist who's arguing that this kind of sharp drop, the kind driven by pure fear, might not be the catastrophe everyone thinks it is. Actually, they're saying it could be the perfect setup for a recovery that's way faster than anyone expects.
And that brings us to a guy named Tom Lee and his theory on recovery. Now, if you follow the markets, you've probably heard of him. He's a pretty well-known bull, and honestly, he has this knack for being right when everyone else is predicting doom and gloom. His whole framework gives us a totally different lens to view this crash through.
Okay, so here's the core of what Lee is saying. It's simple but powerful. Not all market crashes are created equal. He argues that what causes the crash is the single most important thing because that's what's going to determine the shape of the recovery.
He thinks what we're seeing right now isn't because the economy's fundamentally broken. Instead, he calls it a policy shock. So think of things like sudden new regulations or some crazy political news, stuff that totally spooks investors and makes them sell, but doesn't actually damage the real economic engine underneath it all.
And this is where it gets really clear. A policy shock decline, that's usually driven by sentiment, by fear, and it often leads to a super fast V-shaped recovery as soon as that fear fades. But a real economic downturn, that's totally different. That's driven by fundamentals breaking down, and it creates this long, slow, grinding U or L-shaped recovery that can take forever.
Now look, it's a really compelling theory, right? But we gotta remember, it's just that, a theory. And that means we need a little dose of humility here, which is perfectly summed up by a quote from the legendary screenwriter William Goldman.
Goldman told this great story about 1982. He said he was 100% certain, like everyone in Hollywood was, that E.T. was going to win the Oscar for Best Picture. It was a total lock. And then, Gandhi won instead. Everyone was just completely wrong.
So what's the point of that story? It's that the goal isn't to be certain. Because in a world where nobody knows anything for sure, you just can't be. Smart investors know this. They're not looking for a crystal ball. They're looking for logical frameworks, educated guesses, to stack the odds in their favor. And Tom Lee's theory, that's a perfect example of one of those frameworks.
Which brings us to a really interesting case study. Let's take this V-shaped theory and see how it's being applied right now to build a bullish case for a specific crypto asset called Bitmine, or BMNR.
Okay, so the bull case for BMNR is built on 4 key steps. Step 1 is the foundation. And the idea here is that the Ethereum market, which BMNR is closely tied to, is basically hitting rock bottom. So you've got a solid floor to build on. Step 2 is this really interesting value add, which leads to step 3, the multiplier. Analysts are calling this multiplier the math. So what is that? Think of it like a premium. It's the extra value the market is willing to pay for BMNR, beyond just the value of the Ethereum it holds. The theory goes that as the company rolls out new income streams, we're talking staking, a new app, things like that, it proves it's more than just a piggy bank for ETH. And as it does that, this math premium could double or even more.
And this is where it gets really powerful. The whole theory combines a recovering Ethereum price with that expanding MERF premium. So you're not just betting on Ethereum to go up, you're betting on 2 things happening at the same time. The price of ETH recovers, and that MERF multiplier on top of it also goes up. It's like a powerful 1-2 punch for potential growth.
So what happens when you combine those 2 things? Well, that's how some analysts are getting to this projection, a potential upside of 200 to 300%, and not in years, but in just the next 3 to 5 months. Now that is a huge call, no doubt, but it's one that's built on that logical, step-by-step framework we just walked through.
All right, so let's zoom out and put a bow on this. It's so important to remember this isn't a guarantee. Of course not. This BMNR case study is just that, a case study. It's an educated guess. It's a framework, a thesis, for trying to navigate a world that is fundamentally uncertain.
This whole thing is a perfect example of what investors try to do in a downturn. They're looking for a logical thesis, a good story, to stack the odds in their favor, especially when everyone else is running for the hills, when fear is the only thing in the air.
And it all comes back to that classic piece of investment wisdom, doesn't it? You buy when there's blood in the streets. The greatest opportunities, the theory goes, almost always show up in those moments of maximum pessimism, when it feels like the world is ending.
So in the end, whether this specific theory about BMNR plays out or not, that's almost not the point. The bigger question to leave you with is this. In an uncertain market, where are the educated guesses pointing next? When everyone else is panicking, what frameworks are you going to use to find the opportunities that they're too afraid to even look for?